All right, welcome everybody. Welcome to Talkin Investing. You're here with Tom and George. This is our end of the week live stream. We've got a lot to talk about. We had a big week as always. So we're going to talk Bitcoin and we're going to look at what Bitcoin is doing. But there was a lot of news this week. If you saw the thumbnail, we're going to talk about Meta. There's some stuff going on with Meta that we got to talk about. SK Hynix went IPO'd in the United States today, so that was a gigantic, I think, 26 or $27 billion IPO. That's a memory stock, so we're going to talk about that as we talk about the memory stocks and the AI trade. That was a big part of it. Samsung released earnings this week, and the market was, in my opinion, irrational, so we definitely have to talk about that as well. We also got news from Terra Wolf, IREN, Marathon, BTDR, and CleanSpark. George, welcome.
Hang on, don't turn it to me yet. I was putting a poll up and I got screwed.
Oh, okay. Well, let's see what else. We had a big company file for Chapter 11, and we got some news on some bullish news on Bitcoin, some bearish news on Bitcoin. We like to take a look at both sides of that to see how the conversation is going, because right now the market is still very up in the air. As always, I'm going to give you my thoughts as to where Bitcoin is, where it's going, and as to where the Bitcoin miners, and I know that term is a little antiquated right now, so I would say the data center companies, the high performance computing companies. We have you guys know the list. We're going to go through all of that. We're going to show you what they did this week, this month, this year. And
ready whenever you are.
All right. Well, George, over to you.
You ready? This week provided one thing: AI spending isn't slowing down, Tom. Crypto is gaining momentum again, and Wall Street is rewarding companies investing billions into AI. At the same time, there are still risks that could shake the market. Let's break it down with Tom this week. There's a lot of good news that no one's really seeming to talk about, and we don't know why our stocks aren't moving, or do we? Companies continue to aggressively focus on AI. Data center constructions remain to be one of the fastest growing sectors. Demand for AI chips and cloud computing stays strong. Companies aren't spending millions anymore. They're spending billions of dollars. Whoever controls the AI infrastructure over the next decade could become the next generations of trillion-dollar companies. Take it away, Tom.
All right, I want to say special thanks to Dynasty Troll. Love and miss you boys. Hope all is well. Never a better time to buy Sprouts SFM, my favorite stock. I am now officially an employee of the company. Congratulations.
That is funny. Now we know why he liked all those supermarket stocks.
Well, you were right all along, and that trade worked for a long time. You called it out. It worked for. It's been good for several years now. So thanks for stopping in. Thanks for joining us. Thanks for the super chat. And special thanks to all the members that I see in the comments section. And also, it's that time. If you guys could please smash the like button. It does help the stream out massively in real time. It's all we ask. It's free to do. If you like this content, if you enjoy this content, please smash the like button. You can also subscribe to the channel. That is free as well. So you can do that. We're here every Friday after the market closes. We're here every Tuesday after the market closes for members, where we do a little bit of deeper dive, and we get to talk about some things that we don't necessarily get to talk about on the live stream due to the algorithm. So with all that said, let's get to what's going on.
Take a look at that poll, Tom.
I'm going to take a look at the poll. Jeff, we definitely remember you.
Oh, matter of fact, we had a conversation about you. Said, what happened to Jeff?
We did. off the air.
Yeah.
Will Meta make their goal with the amount of power that they said they will get up in the next 18 months? So we're going to talk about Meta a lot. They put out a lot of news. A lot of news was put out around them. there was some leakage, if you will. I have some pretty big questions around all that, and I want to go through it because Meta single-handedly really sideswiped all of our stocks that we look at in the short term. I'm going to talk about why I think in the long term that is totally irrational. So, spoiler alert, I think that move was ridiculous. I have a lot of questions about the information that came out about Meta. I think this stuff is straight out of the Meta playbook. I'm not saying they did anything wrong. I'm just saying this is how they roll. And I think we got to understand that and look at it and see what it means in the long term. And there was an overwhelming amount of information coming out about Meta this week. And I tried to break it down. We're going to take a look piece by piece. I'll get through it as quick as I can. But it was just one thing after the next. And I'm going to call it strategic marketing because we're going to get later to what their stock did this week, and it was fantastic. So I do think this was some coordinated marketing. I'm just not sure how much reality is behind anything that they said. So
let me say one thing, Tom. If you were a member, you would have this information before it took off. And this was given, what, two weeks ago?
2 Tuesdays ago, we called Meta. Yeah. You did. We both did.
Yeah, we called Meta. We said, I think my specific words was, I don't like the company, but they're way undervalued and they're going to take off. I think those were my words.
So this poll is fascinating. It is 50% to 50% right now. I'm just going to let you know, for those of you who don't know and you want to vote, because we're going to get to this, they are talking about having 14 gigawatts up and running by December 31st next year. So we're going to break that down as to what that means, just how much energy that is, because, you know, we talk about exahash, we talk about megawatt, gigawatt, and all of the numbers just start to lose their meaning a little bit. But I'm going to put that into perspective a little bit because I think it's a little bit more than people understand. And I will tell you, unless this is my thesis right now, unless they have access to some alien technology that I'm unaware of, or the ability to use magic that, you know, I'm not aware of, unless as Joe Pesci said, unless the laws of physics cease to exist in Meta's data center build out, I don't know how they could possibly do what they say they're going to do. So we're going to go through it. Now, exactly half of you disagree with me because this poll is 50-50. We are split. So vote if you're on a device where you can vote. Smash the like button if you're on a device where you can smash the like button. We got to get this stream out to people so we can talk. Sarmelon Gaming. Go ahead, George.
You do it.
I said, Sarmelon Gaming, longtime member. Thanks for that. Said, I love Tom, but he's crazy for thinking ABTC has any investor value. We're going to talk about ABTC today as well. That is the big time lagger on the year. It's down 97% off of its fairly recent highs. So the price action on ABTC has been nothing short of absolutely catastrophic. Having said that, again, we did call this from the beginning, and it didn't take a rocket scientist, so it's not like, you know, we made some special call. Pretty much everybody knew when they went public, their valuation, near double digit, you know, $7, $8, $9, $10 billion valuation for that company was pure insanity. It was, I called it when it came out, the number one stock in the stock market, worth shorting. For those of you who've been around the channel, you know I do not short stocks, but if I did, that would have been my number one stock to short. Well, it's down worse than I thought. It's down 97%, but we're going to talk about its valuation now and where it's going. I know a lot of people probably think it's crazy to even think about that. Dynasty Troll said, since I'm here, why is CleanSpark such a bummer bust since Matt Schultz took back over? Feels like we've been here before with him. Many promises, no results. I think there's 3 or 4 companies. Thank you for the super chat and thanks for the question. That's one of the things we're going to talk about. There's 3 or 4 companies that until they have meaningful announcement to make, not regarding build out of infrastructure. One of the 4 companies just put out a massive press release this week on build out. Their stock skyrocketed. It was up 19% at one point on the day. I did sell for the first time in years. I sold some of that stock. It is Marathon. We will talk about it later. But they are like CleanSpark. They need to get a contract. At this point, the market doesn't care. And I'm going to read an article specifically about this. The market doesn't care about how many Bitcoin they mine. CleanSpark puts out their monthly operational report. I actually applaud them for that. I think all these companies should put, the companies that intend to stay in Bitcoin mining, even if they're diversified and they're in AI, they should continue to put out their monthly operational reports, in my opinion. I know they've intentionally stopped doing it. There's only 2 of the ones that I follow that issue a report anymore. It's CleanSpark and BitDR. BitDR has not put out their report as of a half an hour ago yet for this month. They're usually a little later, but they are the leader. They mine more Bitcoin than anybody now. And CleanSpark needs to get a deal. It's been quite some time now since Matt, like you said, Matt took back over. Now, he was always the chairman of the board, but he took over that CEO position. They pivoted. Right, they became the company that was fixated on saying we are a Bitcoin miner. We are only a Bitcoin miner. They shifted gears in a massive way to say we get it. We're in on it. We're late, but it's better late than never. And there were people that were later than them. The problem for them is they don't have any deal flow. They're not talking about deal flow. There's no whispers about deal flow. They need something substantive that the market can cling on to and say, okay, that part of their business is real. Because right now, with Bitcoin, even though it had a nice week this week, we're looking at Bitcoin at around $64,000. Bitcoin economics stink. Investors are not buying Bitcoin miners right now. That doesn't mean that they never will again, and we're going to have that conversation. Every time we get to this point in the cycle, people think these companies are all dead, they're all going out of business, and no one will ever invest in them again. And that's not 100% true. Things are getting tougher. The Bitcoin economics are getting more and more difficult. But I do think there will be a time where they'll be much more in favor than they are right now. But at the moment, it's literally toxic to even identify yourself as a Bitcoin miner. So it's one of the reasons ABTC, who is now the only remaining company that has straight up made it crystal clear, if you look at their investor deck, they are about Bitcoin and Bitcoin only. They will mine Bitcoin. They will treasury Bitcoin. They will buy Bitcoin when they get the opportunity. The problem is, with your stock down 97%, there's not a lot of money left to be raised to be treasuring Bitcoin. So they're in a little bit between a rock and a hard place. So, there's kind of 2 sides to the spot they're in right now. But other than that, every other company that we look at has done anywhere from a small, medium, large, or extra large pivot to high performance computing, data center, and that runs a spectrum of things. Are they just the power? Are they building the data centers? Are they going to build out the machines and be, neo cloud providers? So there's all different things inside of the basket that we're looking at. But again, the ones that have deal flow have run in a big way, and the ones that haven't have not run. And CleanSpark's actually doing, in my opinion, surprisingly well. Now, it's hard to call $12.85 doing surprisingly well, but versus Marathon, I actually think they're doing a lot better. And both of those companies are stuck until they announce a deal. And we're going to look at Marathon because they had a giant announcement. It moved the stock massively intraday. It's already pulled all the way back and lost all of that because while it was an exciting announcement and while it may lead to very big things in the future, at the moment, it's not a deal. The revenue associated with that announcement is zero. And that's what the market cares about. They want to see revenue, and the sooner the better, because there are some of these companies that even if they get a deal, they're going to start signing deals to announce revenue for 2028 or 2029 or 2030. So that is a lot tougher than the companies that did this 2 or 3 or 4 years earlier. So they're at the point where they're already recognizing revenue, or 2027 is going to be a big jump in revenue. The market likes that. They love that. The other side of it, the market's going to remain skeptical on that.
Switching the poll, Tom, keeping it moving.
All right. So will Meta make their goal, which is 14 gigawatts of power by the end of the year next year? Very close. No, 55%. Yes, 45%. So no did end up winning. This was tied a lot of the way through, but that's very close. It's especially in stark contrast to my opinion that there is really no chance of them doing this. It's not even a remote chance in my opinion. It's just no chance. I don't like to say those things. That's not financial advice. It's hard to be definitive about anything, particularly in the stock market, but I'm just doing the math. I'm just looking at the raw physics behind what they're committing to doing, and it can't be done. And I'll tell you, there's a mythological story out there behind some of this that leads people to believe it can be done, and that's relates to Elon Musk and his build out of Colossal, which was done in record time. But Colossal started, to use a baseball term for those of you who understand, that situation was rounding third base when they started. So it's not that hard to get from rounding third to home plate. That's not where Meta is right now. They're starting at ground zero. And that's a big, giant difference.
What's funny, Tom, is, first of all, there is no AI, just so everybody there's no AI. And I'm going to tell you how there's no AI. I just typed in, because somebody, I think it was Gorilla, said something about 70 gigawatts of power is going to be needed for AI and data centers. And it didn't even look at the article that Meta wrote. Okay. It didn't even take that in consideration. And that was a humongous press release that they're going to need 14 to 18 gigawatts. So automatically, if you look at what the hyperscalers need for the next year, it's almost over 100 gigawatts, which, guess what? We don't have 100 gigawatts extra of power. We have 50 to 60.
That's the bottom line, is what I'm going to try and walk through, and you guys can decide for yourself. Is there a shortage of power, or do we now have a surplus of power? Because the story has shifted in one day with not even an actual press release. If you go to Meta's site, it wasn't even a press release. There was a leaked memo. There was some other stuff. And in one day, the market decided to shove the narrative down our throat. And I'm going to show you. I picked maybe 15 articles out of hundreds and hundreds of articles on this. It was relentless. And And they're trying to say in one fall swoop, this situation has been turned around 180 degrees. And instead of that being the biggest bottleneck in all of AI, we actually have a massive surplus of power, and companies are going to go out of business because they're just not going to be able to charge for power. They're not going to be able to get contracts. The few contracts they get are not going to be for enough money to run their business. And if you believe that, I got a bridge in Brooklyn I want to sell you, and I'm down here in Florida. I got a bunch of swampland. It's primo stuff, and I want to sell you that for $2. Ironically, the people that bought all that swampland ended up being millionaires or billionaires. That's a separate story. It's true. It's true, right? That was a running joke for 40 years. Yeah. I got some swampland to sell you in Florida. Well, all that stuff is going for, multi-million dollars an acre now. Or more. Anyway, I digress. That is not the point. Ericanas said, IREN, the next hyperscaler. We're going to talk about IREN for sure. And let's talk about the poll. What is our new poll, George? Will Bitcoin get back to 100K this year? We still have the better part of half of this year left. I mean, virtually half a year left to get from where we are right now in the low to mid 60s back to 100,000. Remember, 126,000 would be taking out its all-time high. So where is it going the rest of the year? When is it going to get there? Are we playing out the 4-year cycle? I think something a little bit different than that is happening right now. So we're going to talk about that too. So honestly, I think something different than that is happening. But if you're playing this like the 4-year cycle, it may be close enough that that strategy is going to work just fine anyway. My concern would be, if you're 90 days late, you guys know how volatile Bitcoin is. You guys know how volatile cryptocurrency is. You guys know the altcoins are even significantly more volatile. So for me, I'd rather be early than late because late can be too late. Sourmel Gaming said, I have absolutely no worries for IREN. CleanSpark, on the other hand, I get it. Listen, this is a show me the money situation. And to me, the ones that are in that situation are Marathon is in that situation. CleanSpark is in that situation. Keel is in that situation. There are some others to a lesser extent, but to me, those are the big ones. Riot is kind of in that situation. Riot has done extraordinarily well versus Marathon. Those two ran in tandem for a long time. And then at one point, Marathon actually became twice the market cap that IREN was. So it ran out ahead. It was the clear leader. And now with the changing narrative and the change in what's important, that has flip-flopped completely. Marathon's like 50% bigger market cap. I'm sorry, IREN is now a 50% bigger market cap than Marathon. So there's been a lot of reshuffling of the deck in the top 10 and the top 5 of these companies. And it really all has to do with when did they move into AI? Where are they in the cycle? And Riot, I feel like they can thank, there was an advocate investor group that came in and bought a big enough share in Riot to have a conversation at the board of director level and say, listen, you got to diversify. You're building all of this infrastructure, right? They have two gigantic, like somewhere between 1.7 and 2 gigawatts of their own infrastructure they're building. And at one point, they were allocating 100% of that to Bitcoin. And an advocacy group came in, ironically, because at the time, what Riot was doing was buying up shares of Bitfarms to try to do a hostile takeover of Bitfarms. And you guys know, those of you that have been with me, I was screaming at the top of my lungs, this is absurd. It's never going to happen. That was never going to happen. It was a monumental waste of time, effort, and energy. And in the meantime, it took an advocacy group to come in and talk to the board at Riot to say, what are you doing? Switch gears. You don't have to abandon Bitcoin, but you got to put some of this megawatt to hyperscaling, to high performance computing. And they did. And as a result, they've been rewarded massively. They ditched the Bitfarms thing, which is now Keel. They completely ditched that. I saw somebody earlier say they still do own a little bit of Bitfarms, not enough to have to report anymore. At one point, they owned essentially 20% of Bitfarms. And it was their hope to do a hostile takeover. But that did not happen. And they wanted to do that. To put it in perspective, here's how unreasonable it was. They wanted to do that, what was it, $2.30? And subsequent to that, Bitfarms, now Keel, has been as high as, over $6 a share. So they were never going to sell the shareholders were never going to sell at $2.30. That wasn't even a fantasy. It was ridiculous. Robert Anderson is saying, right, Tom, that hostile takeover was incredibly stupid. Jason Less, so dumb, he sunk 2 companies. And it's kind of what, listen, that's what I was screaming at the time. You're ruining, I guess as the CEO, if you want to ruin your own company, I wouldn't say that's your prerogative. You still report to the board of directors and ultimately the shareholders, but don't ruin somebody else's company. And in Bitcoin mining, it's not even like they're a competition. You're not competing with an individual Bitcoin miner. You're competing with the entire Bitcoin network hash rate. So, ruining Bitfarms stock benefited them in no way, shape, or form, but it did destroy. There was a point we spent a half a year talking about, is Bitfarms going to have to do a reverse stock split? They're so far under $1 at this point. So,
just so everybody knows, I sold it at the exact bottom.
Oh, no. Oh, that's right. Yes. Don't forget to smash the like button if you haven't. If you just got here, I don't know why. There we go. There's the like button. If you just got here or if you have not yet, it does help the stream in real time. Let's get some people here. I don't know what's going on this week. Jason Less and Fred Thiel both competing for worst. This is from GG Beach. Both competing for worst CEO of 2026. So, listen, both of those companies are on the list where I think they are at a point where they need to show the market they're going to get deals or they're getting deals. I'll go to the Marathon news right now just to put it in perspective, because I'm going to go to the Marathon news and the Marathon chart, and I'll tell you what I did. And again, it's not financial advice. I'm just telling you what I did, and I'm telling you what they did. Marathon signs agreement with HIF to acquire strategic powered land site in Texas. This expands Marathon's digital infrastructure platform with access to approximately 2 gigawatts of power capacity. So that is more than doubling their current situation. The site encompasses more than 1,200 acres and is expected to provide access to up to an initial 1 gigawatt of grid capacity by October of 2027, more than a year from now, and up to 2 gigawatts by April of 2028, approximately 2 years from now. So listen, this falls under the better late than never, but the stock is going to have to wait. At least they've secured the power. I do think there's a massive power shortage, despite Meta trying to tell the world differently. And so locking this down, I think, is a good thing, but I don't think the stock's going to get rewarded for it in the short term. This stuff's 1 year away and 2 years away, but you got to start some point, right? And so, and this is not their first move. They made another purchase earlier this year that will be online sooner. So they are making moves, but so this stock at one point in the day, at the time that I sold, Marathon was up 19% on the day. And I was looking at, and I don't usually do this, but I'm about a week into an analysis of whether I was going to keep my Marathon stock or sell it as it happens. So I was pretty deep into making this decision already. This news dropped. The stock went bananas. On the 30-minute time frame, the RSI broke over 80. The stock was up 19%. So I sold 20% of my shares at that moment. And it wasn't quite the top, but it was a few minutes, within 15 minutes, it topped out and started dropping back down. And if we look at the chart, let's go to the chart. Got it open somewhere unless I closed it. Okay, so if I zoom in, this yellow line is where I sold. I sold at $14.30. It's down to $12.60, which is lower than it was before they made this announcement, right? It opened Thursday above that. So it's literally lost 100% of that up 19% from the top. And it did get higher. I sold at $14.30. This got to $14.41. And I felt like this was the kind of news that excites people for a knee-jerk reaction, but there's no revenue on this. And it's 1 year out and 2 years out. So you get some algorithmic stuff kicking in instantaneously that reacts to this, and then the market digests it, and there's a reset. So that's what I expected. That's what happened. And this went down essentially about 15.5%. So, you know, the down isn't as much as the up. You can see the up was actually from, this is where it closed the previous day. And that was, there's your over 19% up. I was just almost exactly 19% up when I got rid of it. And again, the 30-minute RSI was overheated above 80. And, you know, 70 is considered overbought. 80 is starting to get really overbought. Could it have gone to 90? Sometimes that can happen on those small time frames, 10 minutes, 5 minutes, 15 minutes, 30 minutes. But to me, that was enough. And, you know, like I said, I was already a week into kind of doing the analysis. Do I want to get rid of this stock? So I thought it was a good time to trim my position because I am very heavy in these stocks. And there's a lot of other stuff I'd like to buy. So this is a little bit of a part of a rebalancing effort on my part. And if I get the chance, I will sell more Marathon. I will just tell you, of the stocks that I own on this list, this is my lowest conviction stock. So that is my personal opinion. It is not financial advice. You know, you guys can do your own due diligence and figure that out on your own.
Did you lose any money on it?
On Marathon?
Yeah.
I'm above break even on Marathon, but it's marginal. The rest of these things I dollar cost averaged into a way that even with the recent big pullbacks, you know, there's some of these I'm up 200, 300, 500% on. I mean, I'm up 8 or 9% on Marathon after today's action. I've been red within the last month several times. I'll probably end up being in the red on Marathon again if I don't get rid of it before then. It has not been a performer for me at all. And you got to remember, I'm dollar cost averaging in for like 4 years now. So it's not that I'm breaking even on it. I didn't get to invest that money into something that could have done well for 4 years. So I'm upside down on that money from my perspective. Gorilla IREN CEO, $800 million stock compensation. Fred Thiel makes $50 million a year. So we're going to get to IREN because I spent a lot of time on this, and there were a few people in the comments section that were frustrated that I had spent so much time talking about this. But this was such a big issue that the board of directors actually wrote a letter to the shareholders this week to respond to what they did. So we'll talk about that for a second right now. This is not a common situation. You may have an annual letter to the shareholders. Many companies do that, right? Once their 10K is out and the year has settled, there's an annual letter to the shareholders, or sometimes right after the first of the year, there's a letter to the share. This is kind of an emergency, unscheduled letter to the shareholders, actually from IREN's independent chair. And I'm not going to read this whole thing, but you'll see. So the backdrop of this, I'll spend 30 seconds. IREN has co-CEOs. They are brothers. They were rewarded what amounts currently to $800 million bonus, I'll call it, all in stock. And it's paid out in equal parts over 4 years. They have to hold each part for 2 years after they get it. So there's a lot of minutia past that. But my point was, it's not really $800 million. In my estimation, where I think this stock is going to go over that time, they will end up getting billions and billions of dollars in compensation. It didn't make a lot of sense to me. They already each they're getting 9 million shares each. They already each had 23 million shares in the company. They're already billionaires as it is. I'm not sure why they did this, but I'm not going to relitigate that. It is what it is. It's done. But people were unhappy enough that they literally had to put a letter out to shareholders. I want to write to you directly about the equity awards granted to our founder CEOs earlier this month. You are entitled to hear from our independent directors who made the decision. That is the purpose of this letter. So the first thing is, and I talked about this at great length, so a lot of people asked, how in the heck are they allowed to do this? How is this even legal? It is because neither one of, while they are the co-founders of the company, they are also the co-CEOs of the company. They are on the board of directors. They are not the chairman of the board of directors, and they're not on the compensation committee. So they're, this passes the arm's length transaction test technically on paper, but from a shareholder standpoint, I really don't think that it did. And I think the proof is in the fact that they issued a letter, kind of trying to say, hey, this is okay. First, the context is important. In the past fiscal year, IREN signed some of the most demanding customers in world technology, including NVIDIA and Microsoft, scaled its platform globally, and increased its market capitalization from under $4 billion to over $16 billion. Our co-founders, Dan and Will Roberts, were central to those results. Well, my answer to that would be, by the way, they each own 23 million shares of the company. So they already got paid for that, right? Their net worth, if the stock quadrupled, then they're not worth quadrupled at the same time. What do they need another $1 billion for past that? The question the independent directors asked. I'm not going to go through this whole thing. If you are interested, it's on their website in their investor relations. They basically try and justify this and say, look, these guys did a really great job. They are the reason they got us where they got us. We made part of this decision a year ago, and, everything exploded since then. So the numbers look big, but it's all good. So they go through and talk about what we did and in what order, the structure in plain terms, why time-based rather than performance hurdles. So that was another part of the issue. There were no performance hurdles for this compensation. While it's paid out over 4 years, no performance required. So, it's not, did we sign more deals? Did we make more money? Did our stock do certain things? Nothing. There was no variables. Just
pretend like we're in the board, okay? You and I pretend like we're in the board right now, okay?
Yeah.
We're making these decisions, and I'm the CEO, I'm the chairman, right? And you're one of the people that are sit on the board. Okay, Go ahead. This is a hypothetical company. Hypothetical company. Go ahead.
A hypothetical company, I would say. So you want to give the co-CEOs $800 million bonus paid out over the next 4 years without any covenants or any thresholds or goals tied to that whatsoever. Is that?
This is why you could never be on my board, just so you know. Just talking, because it went like this. Here's how it would go in mine. Okay, guys, I need you to sign here. And let's see, I pay you $500,000 a year. I pay you $500,000 a year. And you only work maybe an hour or two, a quarter. Again, remember, this is my company. I need you to sign that piece of paper for me real quick. No. Don't read it. You do not read it.
Yes, but I'm independent. I'm independent of you.
Yeah, I know. Sign away, brothers. Oh, you're not, don't want to sign it? I understand. Hey, Joe, let's get rid of Bob tomorrow, okay? Okay. Or get somebody else to take our free money.
This is a hypothetical situation we're describing.
Yep, this is hypothetical, my company.
James Tracy, thanks for being a member, said the board members are all big buddies. They take care of one another, and the real proof is the shareholders come last. They should be compensated on stock performance. Fred Thiel is a joke.
These are the comments of the people that are watching the show.
And Alim, also a member, a longtime member, said, time to fire the board. So, listen, this is why the board had to write a letter to the share. This is not normal, folks. You guys that have been investing for a while know this. You don't start issuing letters to the shareholders to justify your compensation package. That means somebody somewhere is not happy with what happened.
I mean, someone's getting ready to sue.
It's let's just say it's not a good look. And, you know, this probably fell mostly on deaf ears. Now, what George just said is of importance because if and when a lawsuit comes, they have now put in the public record, here's what we did, here's why we did it, it all makes sense, here it is on paper, here's the justification. So for whatever that's worth, why we are confident, that's what happens next and why we are confident. Those are the end. As a result of these grants, we are confident we have secured that outcome for shareholders. So a lot of this was, well, we got to give them an incentive to stay because we can't get to where we're going without them. Well, I think 23 million shares was incentive enough, but apparently they needed 9 million more shares each. I'm going to leave that alone. We've talked about this more than enough. So that's what it is.
BlackRock and we're real close to the same holders. They only own 1.25% of the float of this.
Of IREN?
Yeah.
Well, see, they're not in yet because that means they're just averaging in now. That's
Citigroup is only at 3%. And you know who I don't see here? Vanguard, which you know they're there. They're just below that. You know what I mean?
Until you see BlackRock and Vanguard as number 1 and 2, then this stock has not matured yet.
Yep. Yeah.
It was put in the Russell 1000, which is the larger cap stocks, which also makes it a part of the Russell 3000. So, you know, that was a big step. So I think you will ultimately, you know, nobody knows for sure, but I think you will ultimately see BlackRock and Vanguard either be number 1 and 2 holders of this company or both, at least in the top 5. We'll see what happens, but that is what happens in the vast majority of the time with these companies that end up in the indexes. So we'll see what happens. With all of that said, IREN's my biggest position. I don't like what they did, but I don't think it affects their business other than to piss off their shareholders. I think operationally, they are doing what they're supposed to be doing, and I think that they're way undervalued. And, you know, I'm not buying any more IREN. It's already my largest position. So all I can do is sit and wait right now. But I'm not selling any. And just, you know, again, not financial advice, but my first price I would consider selling shares is $75. and I think that that is on a path to dollar cost average out at much higher numbers later. I don't, some people have extraordinary numbers on this. I think 75, 100, 125, 150 over the next 1, 2, 3 years. All of those are possible. Things that go beyond that, to me, would be a hype cycle. But that's still a lot of upside. And to me, this is a really good company. So I don't like what they did. They wrote their little letter to the shareholders. And it is what it is. I'll leave it at that. I see a lot of comments about all of the CEOs getting, Summermelon Gaming said Jason Less is $58 million a year. I mean, these are big numbers. Gorilla said Fred is making $50 million a year. I can't confirm these numbers. I'm just telling you what people are saying in the comments section. You can go look at their filings if you want to find out exactly what they're actually making. These numbers might be correct. I do know there's 2 complaints in the history of all these companies. One of them is gone, which was these were stock diluting machines. That complaint is gone since 2024. They really shut that valve off. They haven't been doing that, largely because most of them have not added a single Bitcoin miner to their fleet in quite some time now. They do have to shift, and there is going to be CapEx, but it's more convertible debt, preferred shares, or just straight out traditional debt or customer deposits, or a combination of all of those things. So that was a big complaint. That was the number one complaint for a long time, but that's gone. But this is not gone. CEO, this particular industry has the most complaints about CEO salary I've ever seen, me personally, that I've ever seen about any industry in the entire stock market for all the time that I've been doing this. So, for whatever it's worth. And by the way, I mean, the vast majority of these companies they're not profitable. That doesn't mean they're bad companies. A lot of it has to do with a lot of front-loaded CapEx and massive amounts of depreciation. So a lot of them are cash flow positive. A lot of them have positive EBITDA. Only a few of them have had GAAP earnings. But I think that will come over time for the ones that are winners. Christopher, thanks for being Chris, thanks for being a member. Said thoughts on Circle announcement. So Circle, they got approved essentially to have a bank charter, and I don't have an article explaining this. It's not a full blown bank charter, so it is a little bit different than a regular bank. But I do think that's a big deal, because this is a continuing of both sides. Traditional finance trying to meet DeFi somewhere in the middle, cryptocurrency and DeFi trying to get their way in the door to more traditional finance so that they can increase their customer bases, right? The traditional finance companies don't want to lose their customers to cryptocurrency and DeFi. So, they want access on one side, but on the other side, Circle would love access to the rest of the world that's, not necessarily in cryptocurrency, or the cryptocurrency customers they can broaden their services to. So there's more and more crossover. All of this is proof positive that adoption is real. Cryptocurrency isn't going away. I know there's a lot of narrative around there that, this Bitcoin's dead. And I think that's I don't see any validity in that. I see the opposite in every announcement that we get, that cryptocurrency is just growing in adoption, tokenization. I mean, there's news every day. The Clarity Act is that is I am concerned about that getting approved in short order. We would have hoped it was already. Go ahead, George.
Well, it did make it out of committee this week, though, Tom.
All right.
That's not necessarily bad news.
That, it made it out of committee. I think they have a little bit less than 1 month to pass this, and then they go home, and then they run for re-election, and then we don't know what things look like after the election.
Come back after the 7th?
I don't know that they come back or not. I know they said there will be no more opportunities to vote on this between now and after the elections. So this is the last swing at the plate. So we'll see if they can get it or not. And who knows, right? The situation changes on the ground. By the way, this poll is almost dead tied. Will Bitcoin get back to 100,000 this year? 51% yes, 49% no. Thanks for voting, for those of you who voted. And if you have not done so, if you could smash the like button. It does help the stream out.
September 14th is when they return.
September 14th. Okay, so they'll be back. I don't know that they'll vote on the Clarity Act.
I should have ran this year.
It
seems like the biggest, best job in America.
There's two ways to look at that. It's the best job in America, or it's the worst one.
Well, yeah, it's once you get it's the worst one.
So there you go.
Okay, well, you got another pull for me, Tom?
I think we should start our round robin.
Let's do it. You want to give me the 4?
All right, let's do the first 4. Let's do Marathon, Cleanspark, CIFR, Hut 8. So we're going to go through 3 rounds. The winner of each round will do a runoff, and we'll see. The point of these is which one is the best investment today, not which one of these is the best company, because all of these are at different points in their stock cycle. Some of them have already run huge. Some of them are down. So
are you saying for the rest of the year or
for the rest of this year? Which one of these represents the best investment opportunity for the rest of 2026, which seems like the future?
Yeah, I think I fit in. I'm a clown. See, James, you're speaking my language.
Gorilla's asking, did Michael Saylor make a mistake selling 3,500 Bitcoin at the bottom? We're going to talk about strategy. We've spent a bunch of time talking about that in the last several streams. We did a real deep dive with the members. And I'm going to say that situation is moving in the right direction. I think that's playing out very, very similarly to what we talked about on the members only stream. I did not buy. My takeaway from that was pretty much the common stuff. This is all about their preferred stock stretch, STRC. And this is very small, but you might be able to see right here. This is the ticker for MicroStrategy and Stretch. Stretch is now at $87.48. I'm going to pull up the chart. This stock, this preferred stock, I want to get rid of that. We're going to talk about that. This preferred stock has a par value of $100. They just raised, so on the members only stream, we talked about the fact that I thought they would be, within the next couple of days, raising their dividend, and that this would rally and recover back to between 95 and 100. Our big question was, is that going to take a week, a month, 3 months? How long is that going to take? Because this felt like, to me, hindsight's 2020, but this was not at hindsight. This thing was trading in the low 70s when we had this conversation. Which day was... That was a Friday, Monday. Trying to find out which day it was. So Thursday it got down to... So maybe this was actually on a Friday stream that we had the second part of this conversation. Because it was a Friday that this got down to $71. So the thing is, the thing about $100 preferred stock that has a dividend is, it doesn't matter if this stock is trading at $100, $70, $1. The dividend is paid at par value. So you're getting, at the time, it was an 11.5% dividend based on $100 par value. And at the same time, you could have bought the stock for $71, which means you're getting almost a 30% discount on the stock. You're getting paid an 11.5% dividend on the par value of $100. And I thought it was highly likely they were going to raise their dividend, which they did the next day. So it's now a 12% dividend. So preferred stock is ahead of common stock. That's just the order of things, right? In the event of a bankruptcy, and I do not think there's any chance of this company going bankrupt in the next many years. But just technically speaking, if your preferred stock is broken and a $100 par value preferred stock that has an extremely high dividend that's trading in the low 70s is broken, make no mistake. So I thought that this would have to recover before the common stock recovered. And this has now gone, from the bottom. It's not totally fixed yet, but from the bottom to today, it's up 22%. Now, it's got to do another 14% to get all the way back to par. And I think it will do that. And my point was, if you buy this right here, you're going to get a 12% dividend on $100, which means you're really getting a 17 or 18% dividend because you're buying in for $71. Plus, you're going to get the appreciation when this ultimately goes back to par, where strategy will make sure that happens. The question is, how long is it going to take? So I did not opt for this, but I did think there was massive, obvious arbitrage. I think there's still a bunch left, but it's a lot less than it used to be. So I think that selling this Bitcoin is a part of fixing this stock. And it's ironic because if you look, so this is what they've been doing. Back here in June 1st, doesn't feel like that long ago, for the first time ever, this is their purchases. This is a list of all their purchases going back to August of 2020. So you can see sometimes they buy 600 Bitcoin, sometimes they buy 29,000 Bitcoin, but this is week after week, relentless Bitcoin buying. All of a sudden, they sold 32 Bitcoin. Now, my point was 32 Bitcoin is irrelevant. When you have 800, and at the time, over 845,000 Bitcoin, now 843, almost 844,000 Bitcoin, selling 32 is, it's the equivalence of a highly paid executive buying a gumball, right? It's so immaterial. It's almost hard to put it into numbers, just how immaterial that is. Well, the market became unhinged. The common stock started crashing, and the preferred stock broke from par value, and it just snowballed from there. The irony is, when they started selling for real, right, a month later, they sold 1,363 on the weekend of June 30th. And then the week following that, they sold another 2,225. So that's about 3,500 Bitcoin they sold over 2 weeks. or 100 times the amount that they had previously sold, their common stock started to recover and their preferred stock started to recover dramatically. So their common stock is still below where it was when we were having this conversation. And to let me go to the chart because so we'll switch over to MicroStrategy. You'll see for me, I had recently bought some MicroStrategy at $110. I sold MicroStrategy at $350 a long time ago. I don't know, a year and a half ago, 2 years ago. Time flies, but it was quite some time ago. When it finally got down to $110 from $350, and by the way, it got a lot higher than $350. It was trading very near an 1 MNAV. It was very oversold, right? And so it was actually back in this area here where it was bouncing off of 30 on the daily RSI. But I had a line here, and I told everybody, if this line does not hold, this is a multi-year line. This goes back to February of 2024. That's over 2 years ago. It's tested this line several times. It's held. So my opinion was, if this does not hold, there is just no telling how low this stock will go. Now, it found some footing around $80. And that is only because, ironically, they sold a bunch of their Bitcoin, reassured everybody the preferred stock. They bumped up the dividend. The preferred stock's just fine. They issued some clarification on how all this stuff works. And so now they're on the road to recovery. Now, as I suspected, as soon as this line broke, this was a long-term line of support. As you guys know from watching this channel, any other channel, or just doing your own technical analysis, when a long-term line of support breaks, it tends to turn into resistance. So you can see, I mean, this has just held as resistance. On Thursday, we hit it and it didn't hold. We were closed for a long weekend. On Monday, we hit it and it didn't, it candlewicked above and closed below. On Tuesday, it candlewicked above and closed below. Wednesday, below. Thursday, below. Friday, below. So that doesn't mean it's going to be below here forever, but I think the preferred stock's going to have to get fixed for this to break out back to the upside. I think all of that's going to happen over time. I just felt like I did not want to take that ride down. I didn't know how far this was going to go. I just knew once it broke, it was, look out below. So I think they actually did. The original question was, did Michael Saylor make a mistake? No, I think he actually did what he had to do. I think a lot of people pushed a narrative to try and tank this stock. It was never real. And I think it's already turning around. So I think there's going to be a short period of time. Having said that, I decided, you know what? It's not worth whatever potential upside there may be for this. For me personally, it's just not worth the aggravation, the decision-making involved. So I put, that money into a Bitcoin ETF. The Bitcoin ETFs don't have volatility like this. They have the same volatility of Bitcoin. They hold the underlying, they hold Bitcoin. They trade 1-to-1 with the fee being negligible. So you're not really getting erosion on a fee. The fee is like 0.2%. So, I thought that for me, with a lot of super high volatility, higher risk, higher reward investments that my portfolio was full of, I just didn't feel like there was room for MicroStrategy in there, even though I don't see any scenario where this company fails. They may not succeed as well as they want from a stock perspective, but I just don't see how they fail unless Bitcoin fails. And I don't think there's any real chance of that happening, in my opinion.
4 years from today, so 7, 10, 20, 30, what do you think MicroStrategy would be at? MicroStrategy will be at? That's the question.
Well, I think it will go up at a bare minimum. It will go up in proportion 1-to-1 with Bitcoin. So if Bitcoin triples, I think MicroStrategy will triple. Now, with enough momentum, so I'll just take a look and show you the other piece of this puzzle. You'll see it's at a 1.04 MNAV. Essentially, it's worth 1 times its book value. So I kind of called 1.00 as a floor here. When the preferred stock broke, I no longer considered 1.0 a floor, because when things break, you don't know where they go. But this did hold. It got below 1, but not very much below and not for long. So the thing is, if it stays at just 1-to-1 forever, then as Bitcoin goes, this will go. If this goes up, if it goes to 1.5, it's been, back in the day, it was over 3. So if it was over 3 right now, this would be a $300 stock. I don't think it's ever getting back over 3. I don't think it's ever getting back over 2, but I could see it going, up to 1.5 in a bull market, in a Bitcoin bull market, and the narrative being flipped. I know it seems like all these things in the middle of a bear market right now, these things seem like they're so far away and they're so unrealistic that none of them are ever going to happen. But there will be a day where all this stuff is back in favor. So, but for me, the negligible potential upside just didn't outweigh I'd rather just be in Bitcoin, given my overall portfolio. So that's why everybody's got, we always say, do your own due diligence, make your own decisions. And that is because everybody's portfolio is totally different. So you got to figure out, does this stock fit into my portfolio? So first you got to figure out, is this a stock worth buying? Short-term, mid-term, long-term? And if so, even if it's worth buying, does it work in my portfolio? Or am I already too heavy in whatever this thing may be, that it's probably not prudent to pile on even more? Which is why on this big pullback of IREN, I didn't buy any IREN. Now, I didn't sell any, but it's already my biggest position. But there is no reason on a stock I'm up 500% on to start dollar cost averaging in right now. The downside risk is so dramatically higher than the reward that it makes no sense. Now I stand the potential to start losing money that, I'm 500% up on. So anyway, you guys can do the math. My point is, know your portfolio, do your own due diligence. And I know we pound the table. And as we always like to remind everybody, all of the stocks we talk about, pretty much all of the stocks that we talk about, have extremely high level of volatility. This is not for the faint of heart. If you don't like volatility, then you're not going to like any of these stocks, because there's some days where, every one of these stocks is up double digits. Some of them can be up 20%. We've had days where some are up 30% or more. We've had time periods where some of these stocks are up 300% in a month. But we've also had the opposite. So it's brutal. James is asking, Tom, how much Bitcoin does Mara own now? It used to be second behind Strategy. It is no longer second behind Strategy. There are 2 other companies, and I don't remember their names, that have passed them because they sold a bunch of their Bitcoin. They have about 35,000 Bitcoin when last I saw. I believe that's the current number right now. So they sold a bunch of their Bitcoin. There's a couple other companies that have been accumulating. I think Marathon, last I checked, which was within the last 1 week, Marathon was now the 4th largest holder of Bitcoin as a treasury of any publicly traded company. It used to be second. And it was solidly in second. And I don't love the fact that Marathon sold a bunch of theirs, not at the bottom. They're in a totally different equation. And they sold theirs to pay debt off that wasn't even due yet. I know there's a long explanation as to why some people think that makes an awful lot of sense. I think it makes no sense, and I think it was the wrong move, and it's one of many reasons I've been reevaluating my Marathon position, and I did take some profits when it was up 19% intraday. So, and it's a part of a larger question I'm asking. There's some companies that until they prove otherwise, Marathon, Riot, CleanSpark, Keel, Hive, and ABTC are Bitcoin mining companies. Because anywhere from 90 to 100% of their revenue comes from Bitcoin this year, and anywhere from 90 to 100% of their revenue is going to come from Bitcoin mining next year. That is not true for IREN or CIFR or Terra Wolf or Hut 8. I don't know where their income comes from, but that's not true for them. BTDR actually has a totally different formula, but they're the biggest Bitcoin miner out of all of them now. So, they do different things. They actually make their own machines. And they had some news. Let's go to BTDR's news to kind of put in perspective why BTDR is a little bit different than everybody else. And I hold some BTDR. It's by far not my biggest position, but I hold some BTDR, and I think there's a lot of upside here. But it's a different equation completely. So when I hold BTDR, to me, that's not a part of the basket of stocks that I put IREN in. BTDR to open a 36 million advanced tech manufacturing facility in Sparks, bringing 70 high-tech jobs to Nevada. BTDR Technologies, a world-leading technology company for AI and Bitcoin mining infrastructure, has broken ground on a 187,000 square foot advanced electronics manufacturing facility in Sparks. So to be clear, what they're going to build in here is their own ASIC Bitcoin miners. The $36 million investment covering the plant, equipment, and construction establishes BTDR's first domestic manufacturing and assembly footprint. The Sparks facility will complement the company's existing U.S. data centers and its innovation hub in San Jose, California. They are looking for greater exposure to the United States market. This is not a U.S. company. They're located in Singapore, I believe. Slated for completion by the end of 2026, so this year, the plant is expected to produce 10,000 units of BTDR's industry-leading Seal Miner computing hardware each month. So, for the most part, their Seal Miners are their Bitcoin mining machines. The biggest customer they have is obviously themselves. Their entire fleet will be comprised ultimately of their own latest and greatest machines. They put out some pretty aggressive numbers on some unbelievably efficient machines. They have fallen short of their original estimates. If you take a look, you'll see that. But they have made massive efficiency improvements, and they continue to do so. And, building them themselves is, that's a level of vertical integration past really where the rest of their competitors are. In addition to that, opening a plant in the United States opens the possibility to more sales in the United States. So, just from eliminates the potential tariff talk that's been a thing for the last year and a half, and who knows how long that'll go on. But even more than that, you're just the pipeline is local, because the United States has a massive build out on Bitcoin mining. So a lot of their customers are here. So this makes a lot of sense to me. Now, they mined 921 Bitcoin in the month of May. They have not put out their June monthly operating report yet, unless they did so in the last few minutes, which they did not. So, let's see if they can get to 921 is spectacular, right? For comparison, CleanSpark, which is at 50 exahash, CleanSpark did 614 in June. And CleanSpark's one of the big boys. They're probably mining CleanSpark, Marathon are probably the only two that are even competing with BitDR at this point. But BitDR, I think, has the highest production out of all of them. Marathon no longer reports their monthly numbers. If you really wanted to dig into it, they got their own pool, so you could figure it out. But they were never reporting 900s after the halving. They were in the 600s and 700s, so I suspect that's where they still are. They haven't really added any exahash. All of these companies. So here, this is a classic example. CleanSpark, which derives really all of their money from Bitcoin mining, they are at 50 exahash. They've been at 50 exahash for a year and a half. They are at 16.07 joules per terahash efficiency. That was second only to IREN in the entire basket of publicly traded Bitcoin miners. IREN was 15. These guys were 16.07. But you can see it's a year and a half later, and that's the identical number. And that is because it's the identical fleet. All of these companies stopped adding Bitcoin miners. And we did call that out in real time somewhere between a year and a half and 2 years ago. To me, it basically became clear it's time to stop buying Bitcoin mining machines, not even because it's time to switch into high-performance computing, because the machines that are going to be built and bought at or around the next halving are going to be so dramatically more efficient than these machines that it made no sense to buy another 20 or 40 or 100 exahash worth of machines that are already going to be outdated by the next halving. So to me, it made sense going into the 6 months leading up to the next halving, whatever the latest and greatest technology is at that point, that's the time to add to your fleet. So I think a combination of factors, the Bitcoin economics being tough, the concept that I just talked about, as well as a shift away from, or at least sharing with high-performance computing, all of those things led to almost every single fleet. The only fleet that I'm aware of that's growing right now is BitDR. And they're pushing like 70 exahash. So everybody else has been similar or is being reduced and being phased out completely. So a lot of these companies have already said, we're getting out of the business. Keel, for instance, is getting out of the Bitcoin mining business. They may still have some machines running right now, but they've made it clear that by the end of 2027, they will have zero Bitcoin mining machines running, and they will no longer be associated with Bitcoin in any way, shape, or form.
So they'll just be doing nothing then?
You bring up a good point, George. Unless they can get a contract, they'll literally be doing nothing. If they're not mining Bitcoin and they haven't gotten any high-performance computing contracts, that's not a great spot to be in. I feel like a deal is coming for them. I know this is painstaking. These are huge deals. They're complicated deals. And a lot of it
has complicated deals. You give money. I supply a computer with you to store stuff. Not complicated.
It's a lot of this is timing. People want stuff that's ready to be plugged in and go. So for some of these companies that are 6 months, 12 months, 18 months out from being ready to be plugged in, a lot of the hyperscalers, they're not at that phase of the business yet. They're desperately looking for energy right now. And this is where we'll get into the meta conversation, because we are being sold a bill of goods that there is a glut of energy, and all the hyperscaler neo cloud companies are in big trouble because demand is not higher than supply. It is not the bottleneck in AI. There is now a glut of supply, which I am just going to say, my opinion only, That's one of the most nonsensical things I've ever heard. We'll go through it right now. Sarah Mellon Gaming said exactly everything about Keel is all talk. Maybe that changes in the future, but they have so far to go. People don't understand. I mean, they got to get a contract. I know Sarah Mellon Gaming is not a big fan of Keel, formerly Bitfarms, and they've had to abandon ship. They made some big financial missteps. I will say, I would defend Ben Gagnon. I think when he got promoted to CEO, he was handed a piece of junk. And I think it's a turnaround story. And I think he will complete the turnaround. So that's just my personal opinion. We'll see what happens. But I get people that are frustrated because, this company's had to abandon ship on their plans multiple times over the last 5 years due to some financial missteps. So I don't think we're going to see that this time around. I think they're going to get where they're going. I could be wrong. Won't be the first time. And then we will get to, I see somebody asking Tom's thoughts on Wolf deal and why it tanked. I will get to that. This is another thing we talked about at great length on the members only. This made sense. There is a reason that the Wolf deal tanked. I'm going to go through that. And I think it makes sense. And that doesn't mean it was a bad deal. It's just, you want to talk about a complicated deal. This was a complicated deal. There was give and take in this deal. And the knee-jerk reaction, all of these things, when press releases come out like this, and I'll go to the press release, so I'm not talking in hypotheticals. This came out on July 6th, so this was Monday morning before the market opened. Terra Wolf announces Anthropic lease at the Justified Data Campus. That's the first part. I'm going to hold on to I'll read it. And sale of majority interest in Abernathy joint venture to FluidStack. Okay, the first line on this long-term AI infrastructure lease expected to generate $19 billion of contracted revenue over the initial term. Remember, these algorithms trade in nanoseconds. They don't. Ultimately, the market gets past the first line and past the second line. It digests this whole press release and it prices it accordingly. But the knee-jerk reaction is $19 billion of revenue. Buy. We'll figure out the rest later, but we got to get into this now before everybody else does. Well, the rest of it is Abernathy transaction monetizes approximately $450 million investment at a premium. I think they got about a little over $500 million, I believe, and provides capital to expand their wholly owned AI infrastructure portfolio. What is happening here? So you'll see separately, and this is why the stock later adjusted down. The initial reaction was a massive move. I'm going to go take a look at this one.
I'm only 64 likes.
Only 64 likes. Do us a favor if you could, please. Be so kind. It's free.
68.
Smash the like button. We go for 150 likes, but man, we're not even getting 100 these days. So
don't take it personally, Tom.
I don't know. I don't know what to say. Smash the like button if you're willing. We appreciate it. Okay. So you'll see. This line right here is an info line from the bottom to the top of this trade. And let me just... like this line got, somehow this is a little bit off. I don't know why, but that's 24%. So you're going to see, this is where this was the close on Thursday. Now, it was a holiday weekend in the U.S., so there was no trading on Friday. Obviously, Saturday and Sunday, the market's closed. So from the close on Thursday, down here at 21, this gapped open, right? Because this news came out pre-market. This gapped open over 18% up. Now, by the end of the day here, actually by lunchtime, this was down 24% from the high. So this was really what I'm talking about. This was first line of this. Long-term AI infrastructure lease of $19 billion. The market just ran with that. And once these algorithms kick in, buy orders kick in, this feeds on itself. So bam, straight up. Then they read the rest of the story. And that is, they're saying they monetized the Abernathy investment. No, well, true, but there's another piece to this puzzle. Under the terms of the Abernathy transaction, Terra Wolf will sell its entire 50.1% ownership interest here. In the Abernathy joint venture to an investor group led by FluidStack, which was its partner. The Abernathy joint venture was established in 2025 to develop a 168 megawatt critical IT load AI data center campus in Abernathy, Texas. Since the project's inception, Terra Wolf and FluidStack have worked closely to advance the development of the campus. Following the close of the transfer, FluidStack will continue leading the project. So in other words, they're out of this project. So this was a very big contract that they had. Now, it was a joint venture, but this was their big contract. It was with FluidStack. It was underwritten by Google, I believe. So they're not involved in this anymore. So when I say there's a give and take, yeah, this freed up money to go into this new contract, which is great. The new contract is with Anthropic, which is also an excellent partner. They are a huge player in the AI space, right? They make Claude. Technically, they're actually the biggest player, but and just as an aside, there's really at the moment two front runners that are so far ahead of everybody else. Now, it's early. This could change dramatically over time, but Anthropic and OpenAI, which is ChatGPT, make up much more than 90% of the overall revenue generated from large language models. So now Google is used a lot because they've put it into their search, but they're not monetizing it very much. There's other products out there as well. Grok is out there. There's a bunch of other ones, but Anthropic, which is Claude, and they've gotten a lot of, corporate level customers on gigantic contracts. And ChatGPT is getting more, I think, me and you and everybody else type of thing. Drop in the comments if you're using either of these products, and then that should be after we do our round robin, we'll see who's using what. So this is why Terra Wolf tanked. It ran up massively. I mean, we just looked at the tape. It had a gap up of almost 20%, and then it actually proceeded over the next 3 hours to end up lower than it opened. Because as people read this, they realized, wait a second, this was a faster deal. This was going to be monetized faster. This is a bigger deal, but it's $19 billion over 20 years. So that's a little less than $1 billion a year. That's still a lot of money. This is a very big deal. I think this is very good long-term news for Terra Wolf, but I think the market didn't understand there was a trade-off. You know, and when I say didn't understand, not that they didn't understand it, they hadn't digested the rest of this yet and gone through and looked at what the entire deal entailed. You don't usually get a press release that, hey, we got a $19 billion contract, and oh, by the way, we lost, you know, a multi-billion-dollar contract, which is what this memo, this press release, that's what this says. So net, I think it was a good thing. I think ultimately this helps Terra Wolf. I think Terra Wolf's going to be one of the winners. I think there's more to come. So it's good stuff, but Terra Wolf, CIFR, IREN, they've been beaten down for other reasons. So on top of the fact that the market digested this, the meta news all week destroyed all these companies. And to me, if they weren't already big positions, I'd have been buying these hand over fist. These all went from basically $30 to $20. Right? If we look at Wolf, this was a $30, $29.85 on June 26th. By the end of July 7th, less than 2 weeks later, this was a $19 stock. So from 30 to under 20 in a week and a half, and all they did in the middle was, you know, get a $19 billion deal. Now, it was at the expense of another deal, I understand, but nothing fundamentally changed negative with this company. It just pulled back. Really, you're going to see ultimately because of Meta. Because if you look at CIFR, CIFR was a $30 stock on June 22nd, 2026. By July 2nd, it was a $19 stock. It took the same run. And again, this was some of this first part was, you know, you got a little bit started to get into overbought territory. So some of this was going to be a little pullback. This nonsense to me is meta, confusing the marketplace. You'll see IREN, same journey. I won't go all the way back here. Well, this is June 2nd, 2026, only a few weeks earlier. This was a $70 stock, down to a $38 stock, down 46%. What did IREN do wrong? What the market thinks they did wrong is that they're in the wrong business and, you know, there's a glut of power now, so their product is garbage. I disagree vehemently, vigorously, strenuously. Okay, so let me get a little bit into Meta because that's really the driver here. Meta stock turns positive on the year on data center plans, new AI model pricing. They had so much news this week. I never saw a company put out this much news in 1 week. And a lot of it was leaked memos and that type of stuff. But it was just one thing after the next, after the next. They didn't even seem to care. In the middle, the narrative completely 180 changed. Inside of a few days, they didn't care. It was just news, 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 news. Thank you, Katie. Katie said, hit the like button. Much appreciated. Okay, so Meta stock turns positive on the year on data center plan. So this stock was down for the year. In this week, they got back to positive on all of this. I'll call it news for the time being. Okay, I'm going to try and go through this fast, so let's keep going. This was today. Meta stock has the best week since early 2024. Meta stock this week had its best week in over 2 years as optimism builds around AI strategy. Now, everybody knows, because they told us coming into the year, they're going to spend over $100 billion on CapEx building out AI. The stock tanked on that for half a year. Now, all of a sudden, on the exact same news, because they repackaged, they took that news out of the garbage where the market threw it, because this stock tanked. And let's talk numbers first so you can see.
How do you sit down when your head gets so big?
What do you mean? What does that mean?
No, we called Meta. I mean, we called it. I mean, it's just insane.
You got to keep your balance.
You would know this if you remember.
Yes, membership is dirt cheap, and we meet every Tuesday after the market close. And like I said, we do go through a lot more detail. So you're welcome to join us as a member if you're interested. If not, you can always subscribe to the channel as well. And if you don't want to do either of those things, at least be kind, smash the like button. So this is what happened to Meta. They were down 34% through March. They rallied back up a little. They were down through June 26th, 2026. They were down 32% off of their highs. They were having a bad year. Since then, they're up 23%. But look at the last 2 days. Actually, the gap up from here to the high on the day was 20% in a few days. Why? Well, here's the multitude of reasons all of a sudden Meta is a good stock. And this was a buying opportunity. This was down at $540. It's just under $670 right now. That's a 20% run in one of the top 10 biggest companies in the world from a market cap standpoint is a massive, massive run. This isn't how things used to work, but you better get used to it, because as I think most of you can see, more and more, this is how things work. It's not the nano cap stocks making big moves. It's the mega cap stocks, the trillion-dollar, multi-trillion-dollar companies making 20-30% moves in a week. It's mind-boggling.
Keel did not make it to the final four. CleanSpark and CIFR tied for 36%.
Oh,
yeah.
Well, that's the way it goes. So, okay.
Gorilla. See, you've been watching for a long time. You should probably have been a member.
Yeah, Gorilla's been with us for a long time.
Isn't that crazy? Because, I mean, dude, when I say we called it, we called it. I mean, I'm gonna do a short time, and I'm gonna put that up.
Well, we can pull the clips from the things we've called. And listen, it's not like we bat 1,000%, right? But we work hard at this, and we've made some really good calls along the way.
850 time.
850?
Yeah, that's what we bet.
That's better than the Hall of Fame.
I know. That's what I'm talking about. How do you get your head through the door? 84 time, we're getting there.
All right, we're getting there. Smash the like button. Much appreciated. Okay, Metastock has its best week since early 2024. So we just saw it's up 20% in a few days, right? This is the best week in years. Let's keep going. Why? Why is Metastock soaring today? This article was today. Shares of social networking operator Meta Platforms jumped 5.2% in the afternoon session after a cluster of AI infrastructure and product news reframed the company's heavy capital spending as a path to lower costs, new revenue, and faster growth, rather than a pure expense drag. So the narrative all year has been, pardon my French, what the hell is Meta spending $125 billion on? That question's been a lie all year long. We know what they're spending $125 billion on. The same thing Google is. The same thing Microsoft is. The same thing Amazon is. The same thing Apple is. It's AI. Everybody already knew this.
It's not employee salary. Sorry.
Yeah, that's right. It's not employee bonuses. It may be CEO bonuses. So this whole narrative has been ridiculous to begin with. But now they're going to spend somewhere between 100. So in the middle, they raised it and said, it's actually going to be more like 145 million. Then a leaked memo came out that, it's even going to be way more than that. But now there's a new leaked memo, which we will get to. So instead of this being, man, you're going to spend $145 billion in 2026 and 2027, Meta's CapEx, capital expenditures, is going to be more than all the money they've spent in the history of their entire company. That's how dramatic their CapEx is. But the thing is, I'm not complaining about that. I think we all understand AI has changed the game. And Meta's a part of that universe. And all of the Mag 7 are spending money like this. It's not just them. They're all doing it. And go ahead.
Do you think they're getting to like 2 trillion to 2.5 trillion, or where do you think they end up?
Market cap?
Yeah.
Yes, I definitely think that. I definitely think that. I actually sold all my Meta on that day that it jumped huge. I sold it because on the same day, which we're going to talk about next, the memory chips crashed on what was quite literally the best news in the history of the stock market. That sounds like hyperbole, but it's actually not. It's literally true. I will get to that next. And their stock. So on the same day, I got to sell Meta way up and buy both Micron and DRAM, which is an ETF that holds Micron. Its 3 main positions that make up the majority of it are Micron, SK Hynix, which went public today, which we'll talk about, and Samsung. That's 100% of the high bandwidth memory in the world. That's what that ETF is for. It has a bunch of other memory stocks as well that are other types of memory, and it crashed. And I'm going to show you why and why it made sense to me to get out of this and get into that. And I feel great about it, even though, Meta made the move, right? Meta made the big move. Now it's even up from there, but that's okay because I got to dollar cost average in at numbers I thought I'd never see again. So again, this is all the same news. So the company's heavy capital spending is now a path to lower costs, new revenue, and faster growth, rather than a pure expense drag. On the cost side, Meta said it will begin manufacturing its custom Iris AI chip in September with Broadcom and TSMC, Taiwanese Semiconductor. So remember, like most of these companies, even NVIDIA, which is a chip company, they don't actually make the chips. It's really Broadcom, Taiwanese Semiconductor. They make the chips. And these are multi-trillion dollar companies as well. These are all the biggest companies in the world. This is why I'm saying AI is here. It's real. All of these companies are all in the top 15 biggest companies in the world, and they're all at PEs, forward PEs of somewhere at either 10 or less than 10, 9, 8, 7. Some of them are at 6 or 5 forward PEs. So you can't say this is the dot-com bubble where companies were at 500 PEs or had never made any profit at all or had never even made any revenue at all. That is not this.
I'm not going to sneak out. I'll see you guys.
All right, George, have a fantastic weekend.
See you.
Okay, so now I also, just as an aside, I'm wondering if they patented this a while ago, and that is why Iris changed their name to IREN. Because if you remember, it was Iris, and now they're IREN. Their ticker did not change, but the name of their company did. Anyway, could be a coincidence. I don't know. The Iris chip, this is a GPU going right at, they hope to no longer have to buy from NVIDIA and AMD. Right? NVIDIA is by far the monster. They are now the biggest market cap company in the world. They went back over $5 trillion market cap this week. And they are a GPU maker. AMD has been on a monumental run this year. They are a GPU maker. They're getting into the game. Their PE is quite high, yet I think there's a lot of room to run because momentum is real. And that is a momentum trade that I am playing right now. That's not my normal bag, but to me, it seems just too obvious to pass up. Not financial advice. Like I said, I could always be wrong. You never know until it happens. But okay, so here's some real news. On the cost side, Meta said it will begin manufacturing its custom Iris AI chip in September, with Broadcom and TSMC aiming to cut reliance on pricey NVIDIA and AMD GPUs. As Meta owns more of the silicon stack, inference and training could get cheaper over time. So this is a cost-cutting effort. Monetization is the second leg. Meta is building a $9.1 billion or Canadian 13 billion, and the reason they give it in Canadian dollars is they're building a data center in Canada and targeting 14 gigawatts of total compute by 2027. Now, by renting excess capacity as a, quote, AI cloud, it turns idle or surplus infrastructure into a revenue stream. Scale also helps on unit economics. Meta's build costs sit below the roughly $45 billion per gigawatt industry average. So the same dollars buy more usable capacity than many peers can claim. And I'm going to push back on that, and I'll show you how they got those numbers and why I think a lot of this just isn't real. Growth closes the loop. Mu's Spark 1.1, Meta's advanced coding model. They're calling this an advanced coding model. It's a large language model. This is meant to compete with Anthropic and OpenAI and Grok and Gemini over at Google, is priced at about 1/4 of comparable OpenAI and Anthropic offerings, a deliberate bid to put developers into Meta's ecosystem and widen the funnel for tools, ads, and cloud demand later. Okay, we'll see about that. I don't know. This is, if they're making an offering at 1/4 the price, my guess is their margin is very thin. Meta's an extremely high margin company. So they're talking about entering a bunch of lines of business that have a small fraction of the margin that their main business has, which is advertising revenue. Now, they do want to use their AI to maximize their advertising revenue. But to me, they are talking out of both sides of their mouth in this way. They're saying they're going to monetize their surplus idle infrastructure. So my question would be, why did they announce this week that they're going to build a $9 billion data center in Canada if they're already looking to lease out idle computing space? Those are literally the opposite of each other. Now, some people will argue, and the argument being, well, listen, they got to gear up. They know where they need to be 2 years from now, 3 years from now. And in the middle, they may have some idle capacity because they don't need to use it all themselves. So what they will do is lease out that idle capacity for short periods of time while it's idle. And I'm going to tell you why that is not the same thing as a neocloud provider. And that does not, it's no competition at all. It's a different business. I don't even think they're ever actually going to do any of it, by the way. And Zuckerberg has said as much that they have no idea if there ever even will be any excess capacity. There is not right now. In fact, they are one of, if not the biggest customer of neocloud services. They are renting everybody else's space because they don't have their own. So certainly there's not any excess capacity when most of what they do is rent out other people's space. So the first thing they have to do is build enough to end those leases, and they're locked into multi-year leases. They got to end those and migrate to their own space and get enough capacity to fill their own coffers before they start leasing it out to others. And even if they do lease it out, they have clearly framed this that they're going to turn idle or surplus infrastructure into revenue streams, which means, short-term, on-demand AI infrastructure. Hyperscalers, and I'm speaking of CoreWeave, I'm speaking of IREN, to really, to a lesser extent, Terra Wolf, CIFR, all of these companies, all of these data center companies that are building out power infrastructure, these all tanked because Meta came out and said, we're going to build 14 gigawatts of power, and we're going to lease it out, we're going to lease the excess out. So these other companies don't really need to exist. Well, these other companies have long-term leasing deals. Most of the computing world doesn't need intermittent idle infrastructure. What they need is 99.9% uptime, reliable, affordable, long-term agreements to lock down the infrastructure they need to operate their computing. So nobody's leaving CoreWeave to go rent a few hours of time out on Meta's idle computers. Those are not the same business. And I'm not saying they can't make some, what I'll say, completely insignificant amount of money. If you look at the amount of money that Meta makes, what are we talking? Adding 1% to their top line on this? This is all optics. This is all narrative, right? They're going to add 1% on their top line and something much less than 1% to their bottom line because this is clearly significantly lower gross profit stuff than the advertising that they do. So what are we really talking about? The one piece of this that does seem real, and we'll see how real it is, if they can produce their own Iris chip for less money than buying NVIDIA chips or AMD chips, then at least they will have accomplished some savings. That part of the story makes sense to me. The other thing I'm going to push back on is if they think they're going to build out 14 gigawatts of power in the next 18 months, they're living in a dream world. That is 3 times the amount of power that powers all of New York City. It is a staggering. It's like 14 or 15 full-scale nuclear power plants. You can't do this in 18 months. The lead time to build these things, from green grass to purchasing to permitting to getting access to energy to pulling that energy to the building to building the building, they'll be lucky if they could build a building in 18 months. Never mind. I mean, this is for everyone else on Earth, this is a 3 or 4 or 5 year time frame. But somehow they're going to do 14 gigawatt in a world where nobody can even find the next gigawatt. They're going to build out 14 gigawatts in the next year and a half? I don't think so. A full 7 of which they expect to finish in 2027. So half of it in 1 year. If I had to guess, they will fall at least 8 gigawatts short of this, probably 10 gigawatts short of this. Again, this is my opinion. This is based on everything that I've looked at, what the rest of the market and the rest of the world is doing, the timeframes everybody else has worked on. And, you know, somebody will inevitably point to Colossal, which is something that was built by Elon Musk. And I think that was 1 gigawatt of power, and they built it in 4 months. But the thing is, the building was already there. The power was already pulled to it. All they had to do was build out the infrastructure inside and put the machines in, which is why I said they started rounding third base heading towards home. You don't get to skip all there isn't 14 gigawatts of infrastructure sitting around, right? People are desperate to try to find any. I'm going to go back to here. Marathon yesterday. Expanding Mara's digital infrastructure with access to approximately 2 gigawatts of power. They hope to have 1 gigawatt online by the end of 2027 and the second one in the middle of 2028. This stuff takes time. You just don't snap your fingers and have 14 gigawatts. I understand Meta has a lot of money and they plan on spending a lot of money. And Zen and Tech is saying, so Tom, you're saying I should go all in on shorting Meta? No, I'm not saying that at all. I'm saying Meta's stock just had the best week it's had in 2 years. Meta just created a very good narrative. It's about the story. Stocks are, in the short term and in the midterm, stocks are not about the underlying fundamentals. Ultimately, I do believe my investment thesis is at some point a stock will intersect with its fair market value. So if they're building real value, at some point they're going to hit that stock price. They may surge way past it on a hype cycle. It may take 3 times as long as it should because they remain undervalued until the market gives them their recognition or rotation happens or monetary policy changes or interest rates go up or down or a major world event happens. Who knows what the reasons are? But my guess is Meta's going to keep being a good buy because they're doing the thing that everybody knew they were doing. They told everybody they're going to spend $125 million in CapEx. They told everybody that 8 months ago. There's no new news here. they're saying, well, we're going to monetize some of it. We're going to sell some of our idle downtime on our data centers. You guys do the math. How much money is that? How much revenue is that going to provide for a company that makes hundreds of billions of dollars a quarter? I'm sorry, tens of billions of dollars a quarter. Right? This is a multi-trillion-dollar company. So, adding $800 million of revenue is less than a rounding error for them. So Coach is saying if Meta is serious about how much power they have, there's only one place they'll find it: SMRs that aren't even deployed outside of the Idaho National Laboratory. So SMRs, I believe in SMRs. I hold one of the companies that makes them. I have plans to add 2 more. I think that's a great play. But the first one that's going to come online for consumer use is in the year 2030. So that will be 0% of this build out. They don't even exist yet, to your point. So it's just not realistic. BVD is saying I use and pay for Grok. So I do that too. I have ChatGPT. I have Grok. Some of the other ones I use for free. So let's keep going. Meta to start production of Iris AI chip in September of 2026. We already talked about that. Here we go. Why did our stocks not do well? Meta Platforms jumped 6% on AI cloud ambitions. Can it challenge Amazon, okay, a multi-billion-dollar company, and CoreWeave? Meta Platforms' AI build-out cost of $22 billion per gigawatt is roughly half of the prior estimates. Now, understand, this statement is based on the fact that there was a leaked memo that said they're going to get to 14 gigawatts. So what people are doing is saying, okay, they already told us how much they're going to spend on infrastructure. So if they're going to spend that much and they can generate 14 gigawatts, then their cost per gigawatt must be $22 billion. Meta has never said that, and they will never say that, and I don't believe it's true. You guys can make your own decision on whether you think that's true. Whether for some reason Meta can do this for 50 cents on the dollar of what everybody else who's an expert at this can do in the world. If you think that, then everybody's entitled to their opinion. Making Zuckerberg's compute rental ambition a credible threat to CoreWeave and Amazon. I want to find the next one. I thought I had that in order. One second. Okay, Meta versus CoreWeave. How Meta is looking to bury CoreWeave with Meta Compute. So this Meta Compute like I said, there was 3 or 4 big stories that came out. This Meta Compute is how they're going to have excess infrastructure, and as a result, they're going to get to lease it out, and as a result, they are going to bury CoreWeave. CoreWeave's dead. But it's not just CoreWeave. IREN, Meta Compute, closes the NeoCloud window. So, ladies and gentlemen, according to this person, IREN is dead. Going to 0. IREN Limited remains a sell. So this is somebody that already had a sell. Might be the only person. I don't think there's more than one analyst that has a sell on this. By the way, in the last week, 4 or 5 new ratings came out on IREN, and they were all buy with anywhere from $80 to $100 price targets. So this person is living on his own island. Meta's potential entry into cloud GPU resale and software-driven interface cost reductions threatens IREN's pricing power and neo-cloud economics. Revenue concentration with 2 counterparties. So they're saying IREN has only 2 big deals so far. Right, those big deals are who? Microsoft and NVIDIA, the former largest company in the history of the world and the current largest company in the history of the world. And IREN just started at this. So yeah, they got 2 customers. When a company gets their first customer, while technically that's a concentration of risk of customers, I mean, you got to go from 0 to 1 at some point, and then when you do, you got to go from 1 to 2. These are good signs, not bad signs. And then, of course, they mention the CEO's compensation. So this person's just straight up, IREN's a sell, IREN's doomed. But you know, that goes right with CoreWeave's doomed. Because all neo cloud, the Meta Compute closes the neo cloud window. They're arguing that these press releases now mean anybody in the neo cloud business is in the wrong business, because IREN or Meta is going to fulfill everybody's needs with their whatever their intermittent idle time downtime is on the 14 gigawatts that don't even exist yet. So if I seem like I think this is nonsense, it's because I think this is a bunch of nonsense. And that doesn't mean it's based on nothing. I just think this is excellent marketing. This is a lot of hyperbole. This is a lot of, right? Because it's a leaked memo. It's not a press release. It's inferred lower costs based on a leaked memo in combination with the amount of CapEx they said they were going to spend. So none of this is not Mark Zuckerberg going, guys, we're going to do, because they had their quarterly earnings report. They didn't say we're going to do 14 gigawatts of infrastructure, of power infrastructure. They didn't say they cut their cost in half on building it out. They didn't say they're going to have significant revenue from leasing out GPU space. They didn't say any of that. This is other people saying it. Are parts of this based on a true story? Probably, but the conclusion is faulty in my mind. So, you know, it's all about drawing the right conclusion. And again, this is where doing your own due diligence. If you think I'm the one who's wrong about all this, then you probably think IREN is doomed, and Terra Wolf is doomed, and CIFR is doomed, and here's Marathon trying to get into a business that apparently the window's already been shut. So Marathon hasn't even got in yet. They just bought their first 2 gigawatts, but they're too late because the window's shut. So the final poll, just so that we can get to that, IREN is the winner. 41% say IREN's the best value right now. Terra Wolf in second place at 28%. CleanSpark in third place at 22%. And CIFR in fourth place at 9%. These were the finalists. So IREN, the very company that apparently this gentleman thinks is doomed, they are a sell, we think is the most undervalued stock. I happen to think IREN's the most undervalued stock out of all the ones on our list. So I actually completely agree with these results. I'm not allowed to vote, but if I did, I would have voted for IREN. It is my own largest position, so it's not a giant mystery that I'm a fan of IREN. The real reason Meta shares are surging has nothing to do with its new AI model. According to B of A's analyst of the Reuters report, the gigawatt explosion, Meta is working to add a staggering 14 gigawatts of total compute capacity across 2026 and 2027. So in these 2 years, the memo noted that Meta has deployed 1 gigawatt so far. So put that in perspective. They're going to do 14 in 2 years, but they're at 1 so far. So they must have some second, third, fourth, fifth, and sixth gear that I don't know about. And expects to drop another 5.5 gigawatts in the second half of the year, and then 7 more next year. The cost disconnect. B of A previously estimated that it would cost Meta about $45 billion per gigawatt to build this out. Based on the memo, right? So this is based on a leaked memo. Based on the memo's capacity numbers and Meta's expected $145 billion capex, Meta's actual cost is tracking closer to $22 billion per gigawatt, less than half what they previously thought. So if you're willing to say there's a clear line, verified line from here to there on this, then you've come to a different conclusion than I have. I see a massive amount of... They're not even pretending any of this is fact. They're just saying, based on the memo and based on Meta's expected capex, we're going to do our own math here. And guess what? Everything is going to be less than half of what we thought it was going to be because of magic. I think. I guess. So here, this is me asking ChatGPT. Is Meta competing with existing neocloud companies such as IREN and CoreWeave? So its answer was 5,000 words long, but I took the section out that I think is relevant. Why it may be a different market. Many neoclouds aren't just selling GPU hours. They're selling reserved capacity for months or years, dedicated clusters, enterprise support and SLAs, compliance and security features, custom networking and storage, migration and engineering assistance. Those are services that enterprises often pay a premium for because they reduce operational risk. If Meta's offerings were primarily excess capacity, rented on a flexible basis, it would resemble a market for on-demand compute rather than enterprise infrastructure. So it's apples and oranges. A company that needs 99.9% uptime, that doesn't know how to do it themselves, that needs full support, that can lock it down for several years so they don't have to figure out every 6 months, where's our power coming from, or are we going out of business 6 months from now? They can't just rent periodically from time to time. So the biggest competitive pressure, the segment most at risk would likely be AI startups, research labs, companies running bursty inference workloads, customers that currently use spot or short-term rentals. These users tend to shop based on availability and price. By contrast, customers that sign 2 to 5 year commitments for thousands of GPUs often prioritize guaranteed access and reliability over the absolute lowest price. This was, I didn't force feed this. I asked a simple question. This is the answer that ChatGPT gave. Now, does ChatGPT know everything? Nope. It's wrong all the time. So, take it all for whatever it's worth. But they gave the exact answer that I had come up with myself. And I think if you think this through, this is what makes sense. Okay, so that's the Meta situation. I'm just going to quickly get through a few more things. All right, I'm going to redo a poll we did at the beginning. All right, this was our first poll of today's show. Do you think Meta will get to 14 gigawatts of power running by December 31st, 2027? I've laid out as many of the facts as I can lay out for you. The reality is we're not going to know until December 31st, 2027, but I have a pretty good feeling that I have a pretty good guess about this. Okay, quickly, SK Hynix. This is a Korean company. So this is something that U.S. investors did not have direct access to. Now, it is one of the top 3 positions in the ETF DRAM, DRAM. I own that. I've been buying it. I bought the big dip on it. So I have some access that way, but I don't own any shares of this. They went to market at $149. They closed today at $168. They're up after hours to $171. So I feel like this means they raised something like 26 or 27 or 28 billion dollars. That would have been the biggest IPO in the history of the stock market had SpaceX not just done, what was it, 75 or 80 billion, a month ago. So, but this is still among one of the biggest ever. And SK Hynix is one of the 15 biggest companies by market cap in the world. Chip giant SK Hynix jumps 13% in U.S. market debut. SK Hynix closed out its first trading day on the U.S. market up roughly 13%. The company raised $26.5 billion in its Wall Street debut, making the biggest first-time listing by a foreign company in the U.S. So they hold that record, but in reality, had it not been for SpaceX, I think this would have been either within $1 billion of or the biggest IPO in and of itself out of all companies, not just foreign companies. So this is one of the top 5 biggest IPOs of all time. We got 2 more coming, right? We know Anthrax is going to be big or bigger than this. And we know OpenAI is going to be as big or bigger than this. So, this is why I'm saying this is not the dot-com bubble. There's trillions and trillions and trillions of dollars going into this. And all of these companies, this company's trading at less than a 10 PE. We're not going to get a look at their books, but until they report next quarter, but it's estimated they're trading at like an 8 or 9 forward PE. So very similar to Micron, which does the exact same thing. Which gets me, I want to go through one more thing because I think this is important to understand. AI trade, this was on July 7th, Tuesday. AI trade loses steam as infrastructure boom faces reality check. Record earnings, rising competition, and concerns over slowing AI spending are forcing investors to reassess one of the market's biggest trades. The AI trade, which incorporated semiconductors and memory stocks, is showing signs of fatigue as investors reassess whether the extraordinary spending boom on chips and data centers can be sustained. Semiconductor and memory stocks such as Micron and SanDisk came under heavy pressure on Tuesday after Samsung Electronics reported record second quarter earnings but missed revenue estimates. So this is not true. And this is what was totally reported on that day. Now, this was a preliminary report. We're going to get Samsung's actual earning report later this month. And I think when we get that, you guys are going to see they actually beat on revenue. They actually beat substantially on revenue. And then let's get to the rest of the story. Chip stocks sell off after Samsung earnings fall short of high AI bar. So again, they're saying this fell short. Investors dumped semiconductor stocks on Tuesday after results from Samsung Electronics failed to meet Wall Street's lofty artificial intelligence demand expectations. So while Meta was skyrocketing on Tuesday, these stocks were tanking. So I did switch out of my Meta position into these stocks. One of these was up double digits. The other one was down double digits. And so I switched. I am not a trader. I'm usually a dollar cost average, buy and hold. I have an entry point, an exit point, a strategy. But I've been looking to buy the dip. And when Meta went ballistic like that on news that I didn't trust, and again, I'm not saying don't buy Meta. I think Meta is going to keep going up from here. Meta mints money. Now they're spending all of it on infrastructure, but that's just what's going on right now in the marketplace. Okay, let me find the rest of this. I think I did in my own memo that makes this a little easier to understand. Samsung reported preliminary quarterly operating profits of roughly 89.4 trillion won. That's $58.4 billion. That's earnings. That's profit. That's not top line revenue. $58.4 billion in the quarter, and the stock tanked. This figure includes an estimated, and this is important, and this is where when they do their full earnings announcement and they talk this out, the market's going to reassess. Big money already knows this. They just knew they could fool everybody in the short term and create a big sell-off. This figure includes an estimated 17 trillion won accounting charge to cover special employee bonuses following a late May wage agreement. Excluding this one-time bonus provision, analysts estimate underlying profits would have exceeded 106 trillion won. So there was a number on the street. I think 85 trillion won was the number. There was a whisper number of 90 or 95 trillion. Well, this was actually 106 trillion from operations. So they destroyed not only Wall Street's projections, but Wall Street's whisper number. So all of these headlines saying this was a miss, this is a problem, but wait, that's not even the big part. Accounting recognition, because the company accounts for this as an expense pool rather than distributing it evenly. So they could have done this a different way and had different results, but this is what they did. Even with that, it's $58.4 billion of profit in one quarter. If that sounds like a lot, that's because it is. Samsung Electronics set a world record for the largest single quarter operating profit of any publicly traded technology company in history. The only company at all that has ever had, this was the second best quarter of any company in history, but the other company was Saudi Aramco, which is a state-owned oil company. That one quarter aside, this is the best, and that's why I said, and I'm sure everybody thought I was using hyperbole when I said they just reported the best quarter in the history of time. This is quite literally the best quarter in the history of time. The electronics giant posted a preliminary operating profit of $58.4 billion for the second quarter. Again, the most any tech company has ever made in the history of time, beating out NVIDIA, which held the record. Okay, so here, the numbers. This historic operating profit was a massive 19-fold, an 1,800% increase year over year. So Samsung increased their profits 1,800% year over year, and the stock tanked because it was a bad quarter, surpassing previous tech quarterly records set by NVIDIA, $53.5 billion. So this was $58.4 billion. And remember, that was after a huge one-time write-off. And NVIDIA set this record, beating the previous record set by Apple of $50.8 billion. And I got news for you. This is the all-time record, and Samsung's going to beat it next quarter. So this got 3 months to hold itself as the all-time record if somebody else doesn't beat it in the middle. That's where we are right now in the cycle. Here's to put in perspective. Key financial comparisons. Q2 2026 operating profits, 89.4 trillion won, or $58 billion. Historical combined, 2023, 2024, and 2025. All 4 quarters of all 3 of those years added up, put together, this single quarter profit exceeded all 3 of those years put together. One quarter was bigger than the last 12 quarters all added up put together. So, yet, the stock literally crashed on these earnings, which is why I bought more DRAM, because Samsung, SK Hynix, and Micron make up the vast majority of that ETF. All 3 of those companies, I think, are trading at well under a 10 forward price earnings and have considerable upside left, in my opinion. Not financial advice. But it's hard to do better than the best quarter in the history of time with forecasting for next quarter of beating this. So that's my case for Samsung, for the chip trade, for the AI trade in general. This is good, and it's getting better. These companies are signing multi-year deals at higher and higher profit margins because everybody's trying to lock in so that they don't lose out altogether. So this is just going to get, all 3 of these companies quarter by quarter are just going to get better and better for potentially the next 6 to 8 quarters. And they're already breaking best quarter in the history of the world numbers. So this isn't a little deal. And this is not the end. So let's just quickly go through. This is what our stocks did this week. CIFR was up 10%. So Bitcoin was up 4%. Bitcoin had a good week. This is from last Thursday because the U.S. equity markets were closed on Friday. So this is from the close of last Thursday to this Friday, but it's still only the 5 trading days of this week. CIFR up 10%. Core Scientific up 10%. IREN up 6%. HUT up 5%. Bitcoin was up 4%, a very good week. It got back over 60,000. This was my big concern last Friday, is we were going to lose $60,000. And I'll just take a quick break to show you the 1 day. This white line is $60,000. We did go below this and struggle for like a week, but we never lost it. If you lose, to me, I only count losing a line of support if you break below it and then there's a breakaway to the downside. Then you've lost that line of support. That never happened here. We came back and candle wicked above it every single day. So we were still kind of glued to this $60,000 number. And then we broke through it and ran to the upside. Now you'll see some lines here. This was a lower low on the stock and a dramatically higher low on the daily RSI, which is a bullish divergence. So essentially, we talked about that meant something like this was probably going to happen. And something like that happened. And I don't think it's over. We'll see. It could be. This is on the 1 day time frame. The 1 week time frame has a bullish divergence as well, which is why I think this could last longer period of time. But we will see. But the bottom line is, my point is, we have held 60,000 even with this week-long scare. We candle wicked back to it every single day and then closed back above it and have stayed above it. So we'll see if that can hold. That's my short-term goal. Hold 60,000 and see if we can start moving back up. And the proof will be, we got a high rate here that was around 67,000, call it 67,400. If we can set a higher high, now we have reversed the trend. That doesn't mean we're in a long-term bull market cycle, but it does mean this bullish divergence was short-term. A higher high will mean a medium term. And then if that continues and we take out this high, to me, then we're back in a bull market. Now, if, right, we're a lot of steps away from that. So I'm not saying we're in a bull market right now, but I do think we are well into the bottoming out process. I don't think there's 4 or 5 months of pain left. That's just my opinion. I understand a lot of people think the 4-year cycle is going to play out and it's going to be more like October, November, December before we start to rally. That could happen. We could chop sideways for that period of time. I see a lot of price targets that are extremely lower than 60,000. I'm not in that camp, but time will tell. So just back here, you're going to see the outlier ABTC down 27% this week. ABTC down 76% this year, down 97% off of its recent high. So this is why I think this stock is getting interesting. This is now somewhere around a $500 or $600 million market cap. This was a $7 or $8 or $9 or $10 billion market cap when it started. It was ludicrously overpriced. Everybody knew it. It's fallen 97%. It is now by far the smallest stock out of all these stocks. Every single one of the rest of these stocks is $1 billion plus. Most of them are $5 billion, $6 billion, $10 billion, $12 billion. This is a $500 million. So I have not bought ABTC. I don't know that I ever will, but I do think this is the first time in its very short history that it could be in a buy zone. It's worth looking at. It's worth doing your due diligence. I'm so heavy into this space. It's unlikely I will buy this, but I did not expect a 97%. I expected this to get destroyed. 97%, that's even surprised me at this point. So on the flip side of the coin, you know, HUT's still up 123% this year. Keel, formerly Bitfarms, is up almost 100%, 98%. Terra Wolf, 91%. Riot, 66%. Core, 61%. CIFR, 50%. So you're going to see all but the only things that are red are Microstrategy, which is not even a Bitcoin miner or an AI stock. We added this to the list because there was a high level of interest in it. Drop in the chat if you're no longer interested in this stock, because it is not like all the other stocks that we follow. And an ABTC, which we just talked about, is getting the only thing associated, you know, Bitcoin mining wise that's red is ABTC. All these other guys are green on the year. Now, IREN up 9% on the year is very disappointing to me. But Bitcoin's down 27% on the year. So we'll see. We got half a year left. I don't think this is a bad looking chart halfway into this year. But obviously, it's all going to depend on how the second half of the year finishes. So if we can finish strong, if Bitcoin can end up green at all, that means it will have had a nice move to the upside for the rest of the year. And I think if that happens, I do think the AI trade is in early innings. So all of this talk about Meta flooding the market and there's excess this and everybody's overbuilt that, it doesn't make any sense to me. We'll see if I'm right or I'm wrong, but I give it almost zero weight. So that's just my opinion. This is what's going on. I want to thank everybody for joining us on the stream today. Special thanks to the members. Thank you guys for supporting the channel. Special thanks to the super chats. Special thanks to subscribers. And if you're not subscribed and you're interested in this content and you want a little reminder, you can hit the subscribe button. It is free. You can hit the notification bell. And at a bare minimum, if you would like to do us a favor, you can smash the like button. So thank you everybody so much. I hope you guys have a fantastic weekend. To the members, I will see you Tuesday when the market closes.